automatic postings. Now we'll take up the next item, specify document type for posting of depreciation. When you post the depreciation, what are the document type it has to take, what are the number range interval it has to take. Up to integration with general ledger accounting, the path is same. Up to integration with general ledger accounting, the path is same. Post depreciation to general ledger accounting. Specify document type for posting of depreciation. Double click on define document types. For depreciation posting, SAP is going EF, select details button. Note the number range 05. For 05, you give the number range interval. Select number range and information button. Company code RAL. Select change intervals button. For 05, I'm giving the numbers 10 lakh 1 to 11 lakh. Select insert line button. 05 2020 10 lakh 1 to 11 lakh. Save, ignore the message, press enter. Like this, up to 4.7 WE version. This is the old version. For depreciation number range interval, we used to select external checkbox. We used to select earlier external checkbox. We used to select earlier in the old version. The reason is like this. When we run the depreciation, number of documents will be posted. Number of documents will be generated based on depreciation accounts assignment to account determination. Now, yesterday we have assigned depreciation accounts for account determinations like this: buildings, plant and machinery, furniture, fixtures, vehicles. Yesterday we have assigned only for these account determinations, land and capital work in progress. We have not assigned. We have given earlier in the old version. We used to give like this: 10 lakh 1 to 11 lakh. Select external checkbox in the old version. The reason is like this: every month 4 documents will be generated for depreciation. 4 documents will be generated. One is, first document is 10 lakh. One is depreciation account debit, create to accumulated depreciation account buildings. Second document, depreciation account debit, create to accumulated depreciation plant and machinery. 10 lakh 3. Account debit, create to accumulated depreciation furniture and fixtures. Fourth one, depreciation account debit, create to accumulated depreciation vehicles. 4 documents used to be generated at a time when you run the depreciation. That's why in the old version, they ask us to select external checkbox. External checkbox, 4 documents will be generated from this range. Now in EC6, SAP has modified the program. Now for depreciation number range interval, no need to select external checkbox. Now it's not required. They have modified the program. That's why we are not selected external checkbox. Earlier we used to select external checkbox. Next, specify intervals and posting rules. Same path. Company code RIL. Double click on posting rules folder. Select monthly posting radio button. Select save button and press enter to save in your request. Save in your request. So we want to post depreciation monthly. It's asking monthly or bi-monthly, means every 15 days, quarterly or semi-annual or annual. Now let me explain to you, depreciation for the whole year should be same, whether you follow monthly or quarterly or half yearly or yearly. Suppose asset purchase cost is 1,20,000. Depreciation is 10% straight line method. Depreciation per year is 12,000. Per month is 1,000. When you post monthly, every year 1,000, for 12 months 12,000. If you go yearly, 12,000. If you go half yearly, same amount for the whole year. But whereas if you follow WDV, I take the same example. Asset acquisition value will be 1,20,000. Rate of depreciation 10% WDV. 10% WDV. If you follow monthly, first month depreciation be 1,20,000 into 10% into 1 divided by 12, 1,000. Second month will be like this: 1,19,000, 1,20,000 minus 1,000, 1,19,000 into 10% into 1 divided by 12, 992. If you follow, it calculates every month. If you follow yearly, whole year depreciation will be some other amount. If you follow yearly, first year depreciation will be 12,000. If you follow monthly, first year depreciation will be less than 12,000 because you're reducing every month. If you follow quarterly, whole year depreciation will be a different amount. It should not be different like that. What its system will do is, in SAP, first it takes for the whole year. If you follow monthly or yearly or quarterly or half yearly, first it takes for the whole year. Is a monthly posting 12,000 divided by 12, 1,000 per month, for 12 months, 12,000. If you follow yearly, same 12,000. If you follow half yearly, the same 12,000, it posts divided by 2, that is for 6 months it posts. So in SAP, the depreciation for the whole year will be same, whether you follow yearly or monthly or quarterly or half yearly. Then in second year, the depreciation will be calculated on 1,08,000 in case of written down value method. By 1,08,000, 1,20,000, the purchase cost minus 12,000, 1,08,000. So depreciation amount should be same, whether you follow monthly posting or yearly posting or quarterly posting or half yearly posting. Specify, next step is specify account assignment types for account assignment objects. What is this account assignment types for account assignment objects? Up to 4.7 WE for units, we used to create business areas. In Asset Master, SAP has given business area field. We used to specify business area in the Asset Master. When we post transaction to asset, it updates business area as well as company code. So we used to get balance sheet account business area wise in old version. I told you E6, we have got segments and profit centers. From E6 onwards, SAP has given segments for units and profit centers for divisions. In Asset Master, SAP has not given profit center or segment. They are not given the profit center or segment. They are not given profit center or segment. SAP is given only cost center. So here what we do like this. We make cost center field equivalent field in the screen layout. Yesterday we have done, we have screen layout, we have specified cost center required, business area optional. In Nested Master, we specify cost center. We specify cost center. In cost center, profit center will be assigned. In the cost center, the profit center will be assigned. In profit center, we assign the segment. So that when you post to cost center in the asset master, it updates cost center, profit center, and segment. This is a derivation. We are deriving from the cost center, profit center, and segment. So here what we are doing, we are creating a derivation rule. What we are doing, take profit center from cost center for asset purchase and depreciation. So we get profit and loss account and balance sheet, profit center wise as well as segment wise. That is the advantage of having cost center in the asset master. Then we create the derivation rule in this step. In this step, we say derivation rule like this: take the profit center from cost center in case of asset purchase and depreciation. Path up to integration with general ledger accounting, the path is same. Additional account assignment objects. Specify account assignment types for account assignment objects. Select company code RIL. Double click on depreciation areas folder. Select area 1, book depreciation. Double click on account assignment objects folder. Select new entries button. Account assignment object. Select KOSTL cost center. KOSTL cost center. Transfer type star. Account assignment type. Select APC values posting. Account assignment. Select. Same way, account assignment object. Select KOSTL cost center. Transaction star. APC values posting. Select depreciation run. Account assignment. Select the checkbox. So what we are saying in this step, for asset purchase and depreciation, account assignment like profit center segment take from cost center. Because in the asset master, there is no field for profit center, no field for segment. Save. The next step is when we post the depreciation, we never post with paise. We round it off and make the posting. So specify rounding of net book value and oblique or depreciation. We are rounding off. FCRO, financial accounting, in brackets new asset accounting. Valuation, amount specifications, in brackets company code oblique depreciation area. Specify rounding of net book value and oblique or depreciation. Ignore the messages, enter. Select company code RIL. I will click on rounding specifications folder. Select area 01 book depreciation. Select details button. Select automatically calculate depreciation checkbox. Select arithmetic rounding radio button. Arithmetic rounding means 50 paisa above, it takes next rupee. Below 50 rupees, it takes the same rupee. Arithmetic rounding radio button. Save. Save in your request. Same way, select 30 also. Select back arrow, select 30. Select details button. Select automatically calculate depreciation checkbox. Select arithmetic rounding radio button. Save. So now when you run the depreciation, it posts without paise. It rounds around. It will do the rounding and post the depreciation. The next step is depreciation case creation. What is the depreciation case? Depreciation is calculated using the depreciation key. And internal calculation. Yeah, tell me, madam. Tell me.
Sir, rounding up and rounding down, sir. What's that?
Yeah, rounding up means like this. Now let me show you. Your depreciation is 100 rupees 20 paise. Suppose depreciation amount. Rounding up means it takes 101. Up. Rounding down means takes 100 rupees. I'll do one thing. 100 rupees 50 paise I'll take. Now arithmetic rounding means takes 50 paise or more above, it takes 101. Suppose you say 100 rupees 25 paise. It takes here 101, it takes 100, it takes 100. Like this. Round up means if any paise is there, it takes the next rupee. Round down means any paise is there, it takes the lower rupee. Arithmetic round means 50 paise or above only, it takes next rupee. Here?
Okay, sir. Okay, sir. Thank you.
Okay, thank you. Now we have to create depreciation case. It's calculated using the depreciation is calculated using the key. And internal calculation, the system internally calculates. They are defined at chart of depreciation level and uniform across all the company codes. If all the company code use same chart of depreciation. What is the depreciation key? Depreciation is nothing but rate plus method, like 5% straight line method, 5% written down value method, 20 years useful life method. These are called keys, depreciation keys. Now for this depreciation keys creation, we require 5 steps. Whether you follow straight line method or written down value method, useful life method, any method you follow, any key create, we require 5 steps. One is define base methods. Second one is define decline balance methods. Third one is define multi-level methods. Fourth one is maintain period control methods. Fifth one is maintain depreciation key. First 1 to 4 steps, the 4 steps will be assigned in the fifth step. And fifth step will be assigned in asset master. In the asset master, it will be assigned. So what steps are required? How we do it does, we'll see now. One by one, we'll see. I'll take first step, define base methods. The path is like this for SPRO, financial accounting, in brackets new, asset accounting. Asset accounting. Depreciation. Valuation methods. Depreciation key, calculation methods. Define base methods. Define base methods. Already base methods are given by SAP. What are the base method? What we use, I'll tell you. Now I told you we have straight line method, written down value method, useful life method. For straight line method and written down value method, we have to select base method 0014, that is ordinary depreciation explicit percentage after end of life. For straight line method and written down value method, we have to use base method 0014. I told you first 4 steps will be assigned in the fifth step will be assigned in the asset master. What is this 0014? And for useful life method, we have to select 00111 ordinary percentage from useful life. What these two things are, I'll tell you. For straight line method and written down value method, we have to note down 0014 ordinary explicit percentage after end of life. 0014 ordinary explicit percentage after end of life. What is this ordinary? Ordinary means ordinary depreciation. Explicit percentage. We follow certain percentages. Earlier, we used to calculate percentages given in Schedule 14 of Companies Act 1956. In the old Companies Act 1956, they given the percentage. We used to follow that rates. After end of life, once the net book value becomes 0, not to calculate depreciation. Depreciation will not be calculated. That's why we used to follow some percentages in the old Companies Act. The Companies Act percentages, they are given in Schedule 14. So that's why if you see here, it's where the net book value becomes 0. If you see here, asset purchase cost is 1 lakh. Rate of depreciation 5%. Straight line method. Depreciation amount is 5,000 per year. Depreciation after 20 years is 1 lakh. Net book value after 20 years is 0. So no need to calculate depreciation after 20 years. Because asset will become 0, no need to calculate. So for straight line method and written down value method, we used to follow this one. Now for useful life method, this is as per Companies Act 2013, useful life years given in Schedule 2 of the Companies Act. In the new Companies Act, instead of following percentages, take the useful life, number of years of the life. So we use 0011. 0011 is what? Ordinary percentage from useful life. That means it's like this. Percentage will be taken from the life of the asset. How we calculate now? Asset purchase cost is 1 lakh. We have to keep 5% scrap value or residual value. Asset value is 95,000. Useful life is 20 years. 95,000 divided by 20, the depreciation per year. Now you have to follow this method as per useful life method. So now we are testing all the scenarios. So now we create one key with 0014, one key with 0011. So it's only you're noting down. This will be given in the fourth step. Fourth step will be assigned in the fifth step. So these are both the things already given by SAP. 0010, 0014 already given by SAP. Only you're discussing. Second step, define declining balance methods. Same path, same path, same path. Chart of depreciation, RAL, enter. Now in India, we follow 001. In India, we use 001. What is 001? If you see here, no decimal factor, no maximum percentage, no minimum percent, nothing is there. Some countries, they are not specific which country, they follow other things. Some countries, they use 002, 002. Because SAP is a global package, all country requirements, it has to satisfy. So here, what they use, how it works in the 002, I'll tell you. Asset purchase cost is 1 lakh. Rate of depreciation is 5% straight line method. Suppose you are given discounting factor or decimal factor 2. Decimal factor 2, that is nothing but discounting. 100 minus 2, 98%. Maximum percentage they have given like 20. So what they calculated, they do like this. Suppose depreciation is 5% straight line method. First year will be 5%, second year will be 5%, third year will be 5%, fourth year will be 5%. It reaches maximum percentage 20% after 4 years. So what they do, first 4 years, they calculate like this. 1 lakh is the cost. 5% is the depreciation rate. Into 98%. They're discounting by 2%, 98%. And fifth year onwards, once it reaches maximum percentage, they calculate 1 lakh into 5%. Why they do that way? They say when the asset is new, the wear and tear will be less. The depreciation amount should be less. Once the asset becomes old, wear and tear will be more, depreciation should be more. So what they do, they calculate depreciation from fifth year onwards, the full rate up to 4 years, it calculates at 98% at lower rate. This is some countries' requirement. In India, what we do, we calculate the same way from day 1 till it becomes 0. That's why we use 001. No decimal factor, no maximum percentage, no minimum percentage, nothing is there. So here, only we are checking. This is already given by SAP. We use 001. This is some countries' requirement. So all these 4 steps will be assigned in the, all the 4 steps will be assigned in the fifth step. Fifth step will be assigned in the asset master. So we are noting down 001. Next, define multi-level methods. All the 5 steps will be asset depreciation key. Define multi-level methods, same path. All the steps they have given at one place only. Define multi-level methods. Select new entries button. Multi-level method R1. 5% SLM. The text field. Validity start. Select from ordinary depreciation start date. Select save button. Press enter to save in your request. Save button, save in your request. Double click on levels folder. Select new entries button. Equation year 9999. Years 999. What is this one? I'll tell you once I complete. Periods 12. Base value select 01. Equation value. Percentage 5. Save. Select back arrow 3 times. Select R1. Copy in same chart of depreciation button. Change multiple method to R2 5% WDV. Center. Ignore the message. Enter. Select R2. Double click on levels folder. Change base value to 24. Net book value 24. Net book value. So this is the difference between SLM and straight line method. So SLM straight line method, we are using 01 purchase cost, AR acquisition value. WDV, we are using 24 net book value. It next year it calculates in the net book value. Enter and save. Select back arrow. Select R1. Select copy in same chart of depreciation button. Change multi-level method to R3, useful life. Useful life. Enter. Ignore the message. Select R3. Double click on levels folder. Change percentage, keep it blank. Because life of the asset you have to give in the asset master. When you create the asset master, there you have to give the life of the asset, number of years. We should not give the percentage. Blank. Reduction 5 and save. Reduction 5. I told you you have to keep 5% scrap value. You give 5. Save. This company's act has given 5% reduction or scrap value or residual value. Save. Now in this step, what we have done? Let me explain to you one by one point what we have done here. When it is start, here we are giving from modernization start date. We are giving from modernization start. Let me show you. We are giving from modernization depreciation start date. In India, we calculate the depreciation from the date of capitalization. Capitalization means once the asset is put to use. but we are specifying ordinary difference start date. What is the reason? Suppose, let me give like this. When we create an asset master, there will have two fields, which I'm going to show you afterwards. Two fields. One is capitalization date, next one is ordinary difference start date. In India, suppose the asset is commission, suppose our depreciation 2020 in depreciation to 18. In India, what we do? Date, start date, date. If the asset is capitalized and 22 level, they have to calculate for 12. So by doing start, so it does like this. For India, it calculates from 2011 acquisition year. We are given acquisition year. We are given 9999. Why you given 9999? If I give year, any year, 2018, suppose I have given. This is applicable, whatever you created, applicable only for that year. But every year, we have to create the key. When I give a specific like this, 5% SLM can be acquired in any year. Any year you purchase, not only 1 year. 9999. This, you give this is available for all the years. Any year. You see document types and number ranges. If I give 999, it's available for all the years. So here also it's available for all the years 9999. I need not create every year separately. Next you are given years 999. Years 999, maximum number of years. What is this 999 maximum number of years? In case of 5% SLM asset, what we do? We give like this. We have to give like this 100 divided by 5, 20 years I have to specify. Here I have to specify 20 years. In case of 1% SLM asset, I have to specify 100 divided by 1, 100 years. Here I have to specify 100 years. In case of 5% WD asset, we do not know how many years you have to give. In case of 1% WD asset, we do not know how many years you have to give. So what it says is give the maximum number of years 999. Give the maximum number of years. Give the maximum number of years. So when you give maximum number of years 999, it will not calculate 999 years, because what you have done as for step number 1, define base methods. You specified once the net book value becomes 0, don't calculate the depreciation. We have specified already, don't calculate the depreciation if it becomes 0. We have given in the first step. See here, in the first step you have specified like this. Once no need to calculate depreciation after 20 years, once the net book value becomes 0. Though I have given 999 years, it calculates only for 20 years in case of 5% straight line method asset. That's why we are giving maximum number of years. System checks automatically. System checks automatically. System checks automatically. Now, why they have given this multi-level? Some countries' requirement is like this. First 5 years, 5%. They give 5 years, 5%. Next 5 years, 10% they have to calculate because asset becomes old. Next 5 years, another next 5 years, 15%. Then they give first 5 years, 5%, next 5 years, 10%, next 5 years, 15%. Because once the asset becomes old, they calculate more depreciation. This is some country's requirement. In India, what we do? We calculate the same rate from day 1. So we are giving 999, 5%. Next, we have given periods, number of months in a year, 12. Number of months in a year, 12. Then we have given base value, 0, 1. Equation value, in case of straight line method, we have given 0, 1. In case of straight line method, we have to calculate in the purchase cost. In case of written down value R2, we have given 24 net book value. In case of useful life, we have given like this. Equation value, we have given 0, 1. Purchase cost in case of useful life also. Only we calculate divided by number of years. That is fixed percentage every year. Then we have given percentage rate of depreciation. Rate of depreciation. Then we have given reduction 5. If you see here, for useful life, I have given reduction 5. We have given reduction 5. I told you in the beginning, as per new Companies Act, you have to calculate like this. Purchase cost is say 10 lakh, scrap value residual is 50,000, 5%, 9 lakh 50,000. You have to calculate 20 years useful life. Depreciation will be 47,500. So this is nothing but scrap value or residual value, the percentage given by Companies Act. We have given one more field called remaining life. Remaining life. What is this remaining life? You can see here remaining life. Some countries requirement is like this. Used in case of useful life method, some countries requirement is like this. If you select the remaining life checkbox, it calculates like this. Asset purchase cost 1 lakh. Useful life you are given 20 years. First year depreciation will be 1 lakh divided by 20. Second year depreciation will be 1 lakh divided by 19. Remaining life 1 year is reduced. Third year depreciation will be 1 lakh divided by 18. Like that, it reduces every year. This is some countries requirement. So these are the things what you have done in the third step, multi-level method. Then we have gone for fourth step in this one. Fourth step in this one, maintain period control methods. I told you 4 steps will be assigned in the fifth step. Maintain period control methods. Same path, select new entities button. Already 5 are there. I'm going to create 6. Period control method 006. Description. RL period control method. Here, select 01 pro rata at period start date. Once I complete, I'll tell you. Equation in the following year, subsequent year. 01 pro rata at period start date. Retirement year 01 pro rata at period start date. Transfer also pro rata at period start date. What is this one? Let me give like this. Suppose asset purchase capitalized like this. Today, depreciation for the year you have to calculate. We should not calculate for the whole year. You have to calculate pro rata basis. That is from year ending means 12/11 to 2021. For monthly means 12/11 to 30th/11. Pro rata base you have to calculate. So that's why we are selecting 01 pro rata at period start date. 01 pro rata at period start date. So even subsequent sub-asset also same way. 01 retirement also beginning depreciation pro rata basis. Transfer also pro rata basis. This is the beginning depreciation. How to calculate? Save. All the 4 steps, whatever you have discussed, seen, created, you would assign in the 5th step. The 5th step will be assigned in the asset master. Maintain depreciation key. Same path.
సార్ పీరియడ్ స్టార్టింగ్ అంటే మంత్ స్టార్టింగ్ నేను తీసుకుంటా కదా సార్?
No. Month, sir, if it is in the middle of the month, beginning first purchase, Suppose, see, month starting when it takes the old asset in the current year. For new asset, what it does? New asset, it takes from purchase date to capitalized date to month and date. That is called pro rata.
Okay,
When
sir.
I say
Okay.
pro rata, in the old asset, in that year, it has taken the proportionately. Na? Suppose it's purchased in the old, so in the current year, month starting. This is purchased, suppose say 2 years back. You have purchased 20th August 2018. In that case, what it does, first month it takes 20th 8 to first. If you follow monthly depreciation, 31st. Now in the current year for the old asset, it takes from beginning of the month.
Okay, sir. Understood.
Now the next step is maintain depreciation key. Same path. Now I'm creating three keys. One is useful life, next one is straight line method, next one is written down value method. Select new entries button. Depreciation key RIL1 is a text field. 5% straight line method depreciation. Select period control account to fiscal year checkbox. It is controlled according to fiscal year. Suppose your accounting year is 12 months. 12 months it has to calculate. Your accounting year is only 9 months. 9 months has to calculate. Select depreciation to the day checkbox. Suppose depreciation is you are selling the asset today up to yesterday. The depreciation has to be calculated. Save. Ignore the message. Enter. Save in your request. Save. Ignore the message. Enter. Save in your request. Double click on assignment of calculation methods folder. Of calculation methods. Select new entries button. Depreciation type. Select ordinary depreciation. This is called ordinary depreciation, not tax depreciation, not interest. It's called ordinary depreciation. Phase. Select from the start of depreciation. Phase. Select from the start of depreciation. Then I told you the first 4 steps, whatever you have noted down or whatever you have created, you have to assign here. Base method. Title method, I told you, base method, you will select 0014. This is percentage method. Decline method, what are you seeing? 001. Period control method, select 006. Multi-value method, you created R1, 5% straight line method, R1. Class, select straight line depreciation. Save in your request. So all the 4 steps, what are you discussing, the last 4 steps you have assigned here. Select back arrow 4 times. 1 time, 2 times, 3 times, 4 times. If you see the status, it's coming as inactive. Inactive means cannot be used. So you have to activate. Select depreciation key RIL1. Select activate button. Save. Now this is activated. It can be used. Now we have created straight line method key. Now I go for written down value method key. Select RIL1. Select copy in same chart of depreciation button. Change the depreciation key to RIL2. Change the description to 5% written down value method depreciation key. Enter. Ignore the message. Enter. Enter. Ignore the message. Enter. Set RIL2. Double click on assignment of calculation methods folder. Everything is same. Only multi-level method you have to change. Multi-level method R2. R2 is what? Written down value method. R2. Everything is same. Only you have to change R2. Now this is 5% written down value method. Change class to decline balance depreciation. This is called declining balance depreciation or written down value depreciation. Enter and save. Save. Select back arrow 2 times. Select RIL1. RIL1. Select copy in same chart of depreciation button. Depreciation key RIL3. In the description to useful life method depreciation key. Enter. Ignore the message. Enter. Enter. Ignore the message. Enter. Select RIL3. Double click on assignment of calculation methods folder. Base method select 0011. I told you useful life, not percentage. It takes take the life of the asset. Useful life 011, 0011 percentage from useful life. Multi-level method select R3 save. Multi-level method R3 save. Here also every year the same value will come. It's like a straight line method. Save. Ignore the message, enter. Select back arrow 2 times. Only you check. You see here, SAP has given depreciation key for land and capital work in progress 0000, no depreciation and no interest. No depreciation and no interest. Because I told you land and capital work in progress, we should not calculate depreciation. So we use 0000, only check, already given by SAP. Save. Even if you don't save, also no issue. So like this, we have created 3 keys. One is straight line method, one is written earned value method, one is the useful life method key. All keys we are going to test how it works. Now this continuation will take up in tomorrow's session. Okay. Thank you very much.